Hello and welcome to Accounting Dictionary. The term for discussion is diluted EPS. We know that EPS is equal to PAT by number of shares, whereas the diluted EPS is adjusted PAT by adjusted number of shares. So diluted EPS is adjusted PAT and adjusted by adjusted number of shares. So the adjusted PAT is PAT, profit after tax, plus interest on convertibles minus the tax shield on the interest on these convertibles. Whereas the adjusted number of shares is the actual number of shares plus potential shares. This potential shares comes into picture wherever there are convertible bonds or any convertible instrument sitting on the balance sheet. So diluted EPS arises whenever there is a convertible bonds or convertible debenture or options are there on the balance sheet. So let us take an example. So this is the balance sheet. We can see that there is a convertible bond on the balance sheet. So this interest is on the convertible bonds. Whereas in the previous case we saw that there is no convertible bond. When there is no convertible bond, the earning per share is just basic earning per share. But if there is a convertible bonds on the balance sheet, there is a need to find the diluted EPS. So the diluted EPS is adjusted PAT by adjusted number of shares. And the adjusted PAT is a PAT plus interest minus the tax shield on the interest. And so 35,000 is the adjusted PAT, adjusted for interest on the convertible bonds. And adjusted number of shares, the actual number of shares is 10,000, but adjusted number of shares is 15,000. They are adjusted for the potential shares. The potential shares are the potential shares which are convertible into shares because of the convertible bonds. It's mentioned each bond is convertible into 5 shares. So there are 1,000 bonds now, so convertible into 5,000 shares. So adjusted number of shares is 15,000. So diluted EPS is adjusted PAT by adjusted number of shares. So the diluted EPS is 2.3. So diluted EPS arises whenever there is a convertible bond or convertible debenture, convertible loans, or options or warrants on the balance sheet. If there will be no convertibles, then in that case the basic EPS is enough. There is no need to calculate the diluted EPS. So diluted EPS is adjusted PAT by adjusted number of shares. Thank you very much.